Hi, good morning. I'm Irfan Shah. If you are new to this channel, I'm a PhD student at Aarhus University. In this series of videos, we are looking at investing, especially in stock market, and what are the fundamental challenges and what can we do about it. So in this video, we are going to discuss about the starting problems or starting challenges we have when we want to invest in stock market, but we don't know where to start. So it took me 2 years to actually invest $100 into stock market, even though I had saved up some $100 before a couple of years. So what is the first challenge here? And we need to understand, like, why do we want to invest? Why do we want even to invest? And why is investing essential? In a previous video, we looked at why is investing essential. I think I have linked it here or so here. Please have a look at it. But in essence, investing is important for us as it helps us to preserve the value of our money over time or maybe increase it versus the inflation of money. So basically, the money loses its value over time due to inflation, and investing helps us to preserve the value and maybe increase it over time. So that's why investing is essential for us. And as a society, we want to support the businesses, or we want to guide the businesses by providing capital into solving some important problems. So if you are interested in a problem, let's say renewable energy, then you invest into a company that is working on that particular problem. So that is a core understanding, like why investing is essential for us and for a society. And second major concern we generally have is, okay, what if we lose all the money? What if we don't want to lose the money? We don't want to lose our resources in any sense. So for this, we need to understand one important point, as we discussed in the last video. Stocks are appreciating assets if the stocks are from a good company. But of course, how do we judge if it's a good company or a good business or not? It's really hard problem. If someone can solve that problem, they will be billionaires or trillionaires. Well, I don't know that, but what we'll do is we'll make a close approximation, and we try to look at the possibilities that we can have a safe investment. For example, we don't know whether a company will be a good company or not, but as a whole, the stock market, let's suppose US stock market, has been how do you say, performing better and better over time over the last 100 years. So if you look at the charts of all the companies or US stock market or S&P 500, which is an index, which essentially means it tracks the top 500 companies in the US market, and similarly there are also other indices for other markets. So it has been going on consistently upwards, and of course there are some periods of time where it did go down, but it's still, over time, we say that the market will always go up. But why should this be the case? Like, why should the market go up? Why should the value of companies go up? So this is a very important question, and for that we need to take a step back. What is a stock market? As we discussed earlier, stock market is just a bunch of companies, okay, publicly traded companies, and then companies try to solve some problems and try to fulfill the needs of people. And this is the key point. Over last 100 years, our population, world's population, has been growing consistently, and when the population increases, the number of people number of people increases, and then that means the demand for things increases. Okay, at the end we want food, at the end we want some goods, we want cars, we want etc etc, we want things, we want experiences. So this all creates a demand. So the number of people increases, the demand increases, and to satisfy this demand, the companies will have to supply, and that means they are solving a problem that is necessary. That's why the value of companies increase. So in a nutshell, as we go on into the future, the population increases, and demand increases, and proportionately the value of companies also increase. But which specific companies does the value increase? This is a hard problem. But if you look at the index, there is something called passive investing. That means you simply invest into an index. The index maps tracks all the companies, all top 500 companies, and then if all the 500 companies together perform better, your stocks or assets grow over time. So that is called passive investing. We will look at it later. But a key takeaway from here is that over time demand increases due to population and due to needs, and companies' value will increase because they have to supply for this demand. And that means the stock market will increase over time. This is a fundamental invariant. This is an invariant we can hold on to. This is a fundamental insight people we tend to forget, we tend to ignore, but this is the underlying observation in any investing, in any stock market. Okay, and now we discussed why investing is essential, and then we kind of handled like what if we lose all the money. So if we invest into some index fund, the whole US market or the whole world's economy has to collapse or have to perform really bad over long periods of time, 10 years, 20 years, 30 years. So this is highly unlikely. Of course it is not impossible, but it is highly unlikely. But then we'll have bigger problems. And now, okay, we have sorted these two things, and now the important question comes, like, okay, where to start? Okay, you have $100, and where to invest? Like, what to do? Like, what to know first? So for that, before you invest into in any company or any index, I would suggest to first look into these YouTube videos, or to get an understanding like how do investing work, what are the stocks, like how to buy and sell, etc., etc. And the second thing, my suggestion would be don't put the real money yet, but there are these apps, let's say Trading 212 UK. It's a UK based app, and there you have something called virtual money. Okay, so you don't put real money in it, but it's like a game, like a simulation in the sense. Like, so you start this app and it has, let's say, $10,000 in it, and then you try to buy and sell the stocks. So you get used to the feeling of buying and selling. So you try different things for a few months, and then you get a handle of it. So you don't lose any real money. And so no one is sponsoring me, so the Trading 212 is not sponsoring me, but I'm using it, and I think it's a reasonable app. But of course you can also use Robinhood, etc., etc. If you are from India, I think Zerodha is also there. So there are different apps where you can actually buy and sell stocks virtually, so you don't lose any money, but you get an idea whether you are doing it right, doing it wrong. So meanwhile, you can look into YouTube channels. One thing I can recommend is like financial education. So Jami has a really good videos. Well, he used to have really good videos. I learned a lot from him, but now a bit more clickbaity. But yeah, so I will share the links in the description, and there are also investing books you can read. And yeah, my suggestion is to start from in these apps where you don't have to put your real money, then get used to it, then slowly understand how to invest, and then you can invest your first $100. Yeah. So we will look at into these a bit more detail later, but for now, I think these are the main blocks that you have, the challenges you have before you investing, and you can try these things. And if you have any comments or suggestions or queries, you can ask in the comments. Yeah. Okay, then see you next time.